Good weekend, everyone. I hope you're all doing amazingly well and relaxing after a fruitful trading week. John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to This Week in Review in the U.S. markets. In this case, we're going to take some time on the outlook and the technical overview of the markets to see what to expect as we move into this next week. Now, of course, before we jump on in, make sure to like and subscribe so you don't miss any of our content. We have all kinds of awesome stuff coming out nearly every day, and you definitely do not want to miss out. First off, taking a look at the news and what's going on this week, this week is actually starting off on the 24th, and that will go until the 28th. Looking at the news that we have for the 24th, we can see that on the 12th, there's not really a whole lot to worry about. We've got some small news at 8:30 with the Chicago National Activity Indexes, the U.S. market composite PMIs and all that stuff at 9:45, but there's not really any major news on Monday. Later in the afternoon, they've got the IBM Q4 earnings, as far as like larger companies that may have an impact on the markets. But that's really it. Monday is going to be a relatively calm and quiet day from a news perspective. Going into the 25th, we finally have some news stepping up to the plate at 10 o'clock, the USCB Consumer Confidence. But at 8:55, that starts things off with a red book year over year. 9 o'clock has some minor news on the 25th, and then the big one, of course, 10 o'clock, USCB Consumer Confidence. The forecast is 112, the previous was 115.8. Then we go on to the rest of the day. At 10:30, they have the U.S. 52-week bill auctions and all that fun stuff. At 1300, we have the U.S. 5-year note auctions and bid to covers and all those. And then the one that may have a pretty big move on the markets is the Microsoft earnings for Q2 2022 coming out at 4 p.m. there, which will probably have some pretty big impacts on the markets. Going into the 26th, next we have AT&T Q4 earnings before the market, and that happens at 7 o'clock. Going into 8:30, we have the U.S. wholesale inventories, retail inventories, and the U.S. advanced goods trade balances. Not really huge numbers, especially considering that at 10 o'clock, that's going to be the next big one, U.S. new home sales. That is a big market mover. Forecast is 0.77 million, previous is 0.744. U.S. home sales change month over month is also happening at 10 o'clock. And then, of course, at 10:30, we have Wednesday. That's inventories. U.S. crude oil inventories are coming out then. The inventories will be followed up afterward with another really big announcement. Geez, just getting buried on the 26th. The 26th also, on top of that, has the interest rate decisions and FOMC announcements coming out at 2 o'clock. Fed Chair Powell speaking at 2:30, and man, what a crazy day. And if that wasn't enough, let's stack on top of that Tesla and Intel earnings. Why not throw them all on the list when we go into the 26th? Then we jump over into the 27th, where we've got the U.S. durable goods orders coming out at 8:30, as well as the U.S. initial jobless claims and the U.S. GDP. After that, though, there's not really much. There's a bunch of small things coming out at 8:30 along with those U.S. numbers, but at 10 o'clock we have the U.S. pending home sales. It's a medium announcement, not a big deal. U.S. pending home indexes also at 10 o'clock. 10:30 for you natural gas traders, that is going to be Thursday. That's at 10:30. I don't really trade natural gas too much. 11 o'clock, we've got the Kansas Fed manufacturing, and the 11:30 brings the bill auctions, and 1300 brings 7-year note auctions, but there's really not much else going on until after the market, and that's when things get really fun. Apple's Q1 earnings and Visa Q1 earnings coming up after the market on the 27th. And then finally, wrapping up the week on the 28th, we've got the U.S. consumer spending at 8:30, and that's forecasted at a negative 0.6%. Along with that at 8:30, there's a lot of other news. Tons and tons of stuff coming out. The big one, of course, is the U.S. consumer spending. After that, at 10 o'clock, we have the University of Michigan Sentiment Final coming out at 10, and then that's really it for the rest of the day. There's a whole lot of nothing happening afterward until the following week, and then we start going into February, and I can't believe we're already talking about February. But as far as the big news for the news calendar, again, going across the board here and starting off with the Monday being 24th. As far as the 24th is concerned, we have no big news on the 24th. We do have IBM earnings after the market, though. On the 25th, we have 10 o'clock USCB Consumer Confidence with Microsoft earnings after the market. That's going to be a relatively big one. On the 26th, we have AT&T earnings before the market, and then at 10 o'clock, U.S. new home sales. 10:30 crude oil inventories, and then at 2 o'clock U.S. interest rate decisions, and 2:30 Fed Powell FOMC press conferences. A ton of stuff going on, and if that wasn't enough, we also have Tesla and Intel earnings after the market closed. On the 27th, we have early morning news at 8:30, U.S. durable goods orders, U.S. jobless claims, and U.S. GDP quarter over quarter. And then after the market, we've got Apple earnings and Visa earnings. Those are going to be some pretty big ones. The 28th gives us early morning U.S. Consumer spendings at 8:30, and 10 o'clock U.S. Michigan sentiment final. And that's really all we have to wrap up the week as far as news. So first up, let's jump over into the Nasdaq and see what's happening over in the tech sector side of things. We know there's a lot of tech news and things going on coming up this week with Microsoft and Apple earnings and a few others. But along the way here, the Nasdaq just in general has been getting absolutely crushed. A lot of bearishness moving to the downside here. The market is obviously lower high, lower low. The moving averages are driving lower. Everything is suggesting that the market should continue further down. If we zoom out a little bit further here, back to before this, all this downside movement happened, we did have a little bit of a pullback and then a rally up to new highs. Assumably then, sellers will have tried to get in that move and gotten a little bit stuck. So we want to ask ourselves, these sellers who tried to drive down over here, did they show signs that they may have exited a break even? And I think it's fair to say that yes, they have. Now, if we drive this further up to really accumulate all of the volume and everything that happened up to the highs, we can see that the POC was buried all the way up at the top, and that definitely suggests that sellers have built in their positions, or at the very least, if buyers were buying into this dip, they've taken their profit targets out. If we do want to categorize who is who and where is what and who's winning the fight, let's take a look and drive this down and see. Does this line up? Does this suggest that we are getting support and resistance in this area, basically telling us that these sellers are actually in tune with selling this off? And sure enough, off of all of these, every single time, all the way down, we've had support and resistance the whole way down, definitively suggesting that we have sellers that have built their positions and have worked their way lower on the Nasdaq. And in fact, they've actually taken profit beautifully down in this move. So knowing that the sellers are in control here, where is their larger targets? I mean, we've got to zoom way out to find anything. Looking at where we are now from a wider perspective, let's even go out to a daily chart here. We can see that we are finally pulling back into some healthy pullback territory, big pullback. This is the widest pullback that we've seen in a while. Comparatively, if we were to take this pullback, let's say here, that was the drive down from 2020, we know what happened there, and we combine it to over here, we're actually getting very close to parity of that structure. The parity of structure of that would be at 13,650, a big zone of interest that the market is going to want to look for as far as a zone of support. Now, based on structure, if we go all the way down to the bottom of that 2020 dip to the highs of where we are now, that gives us an idea that we have also here built up a very large position of POC averaging, suggesting that if the bulls have been buying on the way up, they're taking profit, and more likely, given the volume accumulating all the way up to the highs, this is suggestive of the bears trying to push down going in through January and possibly into February. If the market is going to be rotating down off of this, then realistically we can measure off of the top to the reversal point, and that'll give us an idea as to where the market will likely want to find some support. First off, our first zone of support on the downside is going to be actually not too far away at around 14,294. If they want to go down a little bit further, and this lines up nicely with that measured move, 13,460 basically is going to be a nice little zone of interest. If they want to continue a bit further down below that, to the 2-to-1 objective for short sets at 11,843, and the 3-to-1 targets are way down in the floor at 10,159. And of course, just to talk about it, is there's 7-to-1 objectives way out and way through the floor, down to the mantle of the earth at 66,2875. Now, do I think that the market's going to go all the way down and have itself more than have itself down to 7,000? No, not likely. It could. I mean, it's definitely a possibility. Those kinds of things have happened before. But realistically, this looks more like a parity drive. The market had a previous move down. They're looking to drive that back down, and that lines up beautifully with a 1-to-1 move for the shorts as well. Everything stacks up for sellers to continue the drive down to 13,600s, and then kick the market back up from there. That is going to be the hot spot that I think the majority of bulls are really going to want to see right about there. Now, if we can gain a little bit more structure and add to this, then, so much the better. But that is going to be the zone of interest just underneath, 13,500s or even just sub 14K. Switching gears over to the S&P with a very similar situation. The S&P is getting absolutely clubbed into the floor. But more recently, one of the big things that we've been waiting for a while on the S&P is a confirmation of trend shift. All of the other markets were making lower highs, lower lows, blah, blah, blah. The Nasdaq was ripping lower, but the S&P was still in this higher high, higher low transition. We have finally broken through that, retested, and even had a confirmation drive lower. Is literally everything that they need in terms of the way that this moved. Now, if we look back in this previous move before, again, back in, October or so, we can see that sellers have an area of interest hovering right about there, give or take, 43, 47 quarter. And that's going to be the zone where earlier sellers who may have gotten stuck are going to be looking for the market to want to come back and grab those break evens. Now, again, if we drive this all the way back up to the initial highs first, before all this back and forth, we can see a monstrous POC build up at the highs. Once we get through all this back and forth up to another new high, the POC really did not change that much. That would give us the idea that we can see, all right, well, if these were the bulls, did they at least make a scalper's target? And sure enough, that's where all that back and forth was. So from that perspective, then let's flip the script and say, well, the sellers have taken back over. Let's go the other way then. We'll go from the top on down. Do we have proof that the sellers are taking profit in these logical zones of interest? Are we seeing the market stall out? It did bounce there pretty nicely. We get down to the 1-to-1, pretty nice. The 2-to-1 stopped it. It looks as though the sellers are in control and diving down to their targets. Combining these things together, then, we can see something very interesting taking place at the low. We've got the 3-to-1 objective of the downside, which is right here. We have the stuck shorts from before, which is stacked up right here. And that is creating our very, very nice, maybe not that big, our nice little pocket of interest for the bulls to come back in if we are going to see a reversal and kind of kick this thing back off into the highs. At the moment, the sellers seem to be winning the fight, but let's jump back out to the daily and see what's going on from here. From the daily perspective, we can see it's very similar in terms of the Nasdaq. We're getting a very healthy correction, but we do not have a new low on the S&P. We've technically taken out one of these little minor swings right here, but nowhere near as large as what we saw on the Nasdaq. And I mean, before we were talking parity on the 2020 dips as far as the Nasdaq's concerned. The S&P isn't even like half of that. It's nowhere even close. Huge difference in the way that the S&P is setting up. If we do look at it in terms of parity, just to give us an idea of, kind of what's going on, if they did want to pair it up, that would be an S&P dive down to 35.80. That is a monster of a dive that would be required. Now, is that going to be the situation to expect? Well, maybe the S&P does want to catch up, and we have a lot of earnings around the corner that could definitely get things going in terms of getting the S&P to catch up. It only takes one or two good news announcements to really light the fire. Historically, the Nasdaq comparatively always moves more aggressively, but as far as the S&P is concerned, that's a big old dip. So if we're looking at some other things of interest here, we did have another shallower dip over here, and if we take that, we can see that they did do that a few times. We had another relatively measured move there, this dip right there, and now we're starting to dive back down to around that distance again. If they were looking to maybe double this down as far as the rest of the market still working its way lower, then maybe we would see something closer to like the 4,000s. That's a nice psychological level for the market to pull back to and try to find some balance. But we do have some pretty wide open space for the market to continue down and keep driving. I mean, it's a really, really wide open door. If we're looking at a volume perspective from the bottom all the way up to the top, then that'll give us a little bit more perspective, and that really makes it even harder to not like the downside on the S&P for it to catch up. We know that if we shift it all the way to the end, the S&P does shift the POC right up to the top and kicks it off the high, which is a bit concerning. And again, if we don't include that little lower high and just go to that top, that POC is way down there at 33.70, which is actually beyond the parity move. So there are some definitive concerns as far as the S&P is concerned going forward if it does start to hit the boosters. Of course, poor old Dow was not left alone in the absolute bashing in the index markets. The Dow is also working its way lower very aggressively down towards the 34,000 mark at 34,105. If we look and zoom back a little bit, this one was another one of those awkward ones because, well, this is something the Dow's been doing for a while. I mean, we have these really, really wide temperamental swings that have been going on. Look at the daily chart. This has been a mess for quite a while. Structurally, if we were looking at this from a daily, this is more like a spike in channel than anything else. And, well, we cycled off the top of the channel and we're down towards the lows of the channel. We'll get more into the daily structure in a second here. But looking at the 60-minute chart and zooming out a little ways, we can see that every time the market comes down here, there tends to be quite a bit of support down in the 34s. Not to say that it can't cycle lower, making it down to 33,400s or even down here to 32.9. But generally speaking here, 34,000 is a pretty big brick wall that the market struggles to work its way through. A big caveat that they do have is that we did have a rally up, down, up. If it does break down to a new low, that could add some juice, right? But we've got this intermediary swing to work with, and they may try to hold it up. From a risk-reward perspective, this is one of my absolute favorites. We've got the low and the previous swing low. As far as risk goes, it's really hard to not like it down here because the reward 2-to-1 isn't even back to the highs. 3-to-1's to the inside swing and 4-to-1's back up towards the top. A lot of buyers are going to therefore be looking to buy into this dip if they can get some decent reason to. Now, just like all of the other times where the market came down here, it doesn't just go down and scream right back to the upside. Sure, there is some times where it looks like it does it pretty aggressively, but almost every time where it's a reliable rally up, there's some sideways action that takes place first. Sideways action, sideways action. It gives us a little bit of time to figure out what's going on, and more often than not, when we start seeing those higher lows beginning to transition, we know what to expect. Things are probably going to start taking off. We have not even had a higher low. We haven't even had a higher high. There's been nothing aside from downside momentum on the Dow and continuing lower. Zooming out to the daily, obviously, that's where things change a little bit. The daily is where we can see that spike in channel formation going on up at the highs here, and let's draw that out right here. We'll just go best fit, good enough. Really, really nice spike in channel cycle to the upside, and all things considered, we cycled off the highs, rolled down to the lows, cycled right off the low, back up to the highs, right back down to the lows again. Same thing that's happened the last couple times. So all things considered, bulls will be looking for this as a value dip. And here you can see even better those previous swing zones of interest, that wasn't even close to straight, for the bounce point on the bulls. Really nice area, and they certainly defended it last time. But there's always that the cynical side of me that looks at this and says, well, you know what? The Dow has been screaming higher for a very long period of time. Chances are there are going to be a lot of stops because traders don't know where to put them. Well, should we put it here, here? They don't want to risk way back here. Let's get it a little closer. How about here or here? Or how about here or here or here? And notice how they start stacking together. And they get kind of bundled up and built up. That becomes a very big zone of interest for the market to dive through, challenge, and then see Goldman and JP sweep it right back up to the highs. Now, is that necessarily the case this time? Well, we can never be too sure. If we look at the overall volume going across all the way, we have a top-weighted POC that is just starting to break lower. From the bears' perspective, every time the market's gotten underneath that, it's not done very well. So if they start challenging this and making new lows, that could be the spark that we need for a continuation phase and to see this catch up. If we go before all of this upside price action, let's just go back up to the high before it went sideways and choppy sloppy, then we have a nice little balance point down here, but that's a really long way away, down in the 27,870s. If we're looking at this in terms of parity, which is always something that we want to keep an eye on, that 2020 dip right there to over here, that would actually put the cycle down underneath that previous POC. Now, what's interesting here is that if we take this and we measure out, if we go all the way up to the top in what I like to call the max greed short target, that's where the sellers got stuck here. They didn't get it to work out, and they drove all the way up to the highs. Their POC to their max greed target, the max greed target's 23,446 for them. So if they do get an overdrive and bury this all the way into the floor, that's going to be an incredibly major zone of interest. right now where we are, they do have a reason to believe that we are in a zone of support. We're down towards the lows of the channel. But we haven't seen higher highs, higher lows. We've seen no transitional phasing whatsoever. This thing is just buried into the floor, likely hunting for some of that value. Switching gears over into crude oil, which seems like it's just about ready for liftoff into the stratosphere. This thing has been absolutely ridiculous in terms of the overall movement. One thing that's been standing out, obviously, is this really wide stance rotation, which we do typically see in those 1, 2, 3 breakouts that just keep going and going and going. As an example, look at the Nasdaq or the S&P or any of the index markets from 2008 and beyond. They had that higher low transition and just kept on trucking. This looks like it's a very similar situation. And to really back that up, we have an incredibly strong spike and channel formation that's pinning this thing into the ceiling. Now, the market is responding to this very nicely. Even in the midline, they're responding. So buyers are heavily, aggressively buying into this. This is the first time in quite a while that we've had to dip down to the lows. And within those lows, we have cracked underneath some of these little bitty micro swings and down to the channel base where the bulls are looking for a continuation phase up. In the grander scheme of things, if we look at the overall rotation from the bottom to the higher low that we had, that was an L4. And after an L4, bulls love looking for those L1s, which we did have here. And that first L1 pullback was in January 3 or so. They then had another rally up and tried getting an L1 pullback on the 10th, but missed it. And since then, they have been waiting for that L1 pullback for quite a while, which we just got on the 20th. So this bounce back up this is a monster zone. Bulls are really strong here, looking for a continuation, keeping this thing on up to the highs. Now, zooming out to the daily chart, this is where things become a little bit nerve-wracking and why I am always so fearful on the crude market. You're not reading the chart wrong. That chart is correct. The crude oil traded to negative $40.32. This was one of the big reasons why I stopped trading crude oil. Not because I got caught up in this slide down, thankfully, but because of the fact that when it happened, when we look at it, that would effectively mean that every trade that we take needs to require literally a risk requirement of double where it is. Because at the time, before it dove down, it was at $40. And then it went down to negative 40. That means that at all times, on every situation with crude oil, before I get into a position from the long perspective, I have to assume that this could go to zero and then double itself down. That means, and let that sink in for a second, that if I'm trading crude oil at $87, basically $90, my risk can't just be to zero. I can't trust that. It has to be to negative $90. That's why crude oil is such an incredibly dangerous market and why I generally stay away from it now. That slide down there was a confidence breaker for me. The previous swing below that, before all of that craziness happened, was in the $25 and $26 range. But they certainly can't get this stain off of their history. If we go beyond that and we look at what actually took place on through all of this, we have the majority of the volume which balanced itself out at around the $40 mark, which isn't a surprise. Again, that's where it was before the dive down. But that means that if the market is going to keep this going back to the upside, we have to use a negative 40 measurement as our upside targets. That's absolutely insane. Who would have thought? Which, this is the crazy part. This means that our upside objective for a half to one scalper's target is at $80.80, and we see resistance there. So we know that this is actually something that we need to pay attention to. This is an upside objective that could span out further, and the upside target at 1-to-1 is $121. That is a huge deal for crude oil. We're talking prices that are back in, we'd have to go back to a weekly chart to see those prices when it was trading way up there. And this is where things get even better. This is why I love technical analysis, even though we're talking a negative $40 low on this. The 1-to-1 target is right back up to the previous swing highs where all of the longs got stuck in the first place. Absolutely ridiculous how everything is lining up. And that's right up in the $110 to $120 mark. And if crude oil can go ramping up to that spot, holy moly, that's another, we're only at 85 right now. there's a ton of upside potential here when we're talking crude oil. But remember, this is a weekly chart that we're looking at right now. Zooming into the hourly, waiting for a bit more of a pullback like the L1 buyers or even L2 deep dip buyers makes a lot more sense. Swapping gears over to gold, we can see that there is not really a whole lot going on with gold. Generally speaking, it's been stuck in this range for quite a while. The low of the range, on average, seems to be around 1755. The high of the range, again, on average, tends to be around 1835. Now, there's a little bit of a problem for that because that is exactly where the market is trading right now, sitting here on the weekend. That causes some problems. Doesn't necessarily mean that the market has to completely fall apart, but it doesn't help. And now, you know, if we back up a little bit, we can see that there is some rising support. Maybe this will help the market in terms of transitioning up. But they missed the high of it as a channel, and they blew off the lows. That doesn't exactly add a whole lot of hope for that. And we're at the highs of potential value. There's some definitive concerns here. Now, the overall back and forth that we've got going on, the bulls in the short term are definitely in control. The moving averages are pointing up. We've got higher highs, higher lows. Everything is saying that the market should be going higher. But in the bigger picture here, in the wider term, we do have to be cognizant of the fact that we're right at the top of a very long-term value that goes all the way back to June of last year. I mean, we can't ignore that. Now, if we go back out to the daily chart and look at what's going on from the daily, we can see that this is starting to look a lot more reasonably bullish. This looks phenomenal for the buyers, especially from a wave cycle. If we look at it, the wave cycle perspective, we've got a wave 1, and then we've got this disgusting wave 2, which was really nothing more than a wedge. They finally break out of the wedge and continue to the upside here. And once we have that continuation, we can take our wave 3, like we always talk about, right? Big expansion move to the upside. Nice, healthy dip back down on wave 4. We see a very short-lived low on the wave 4, and then a continuation breakout right back on up to finish the job. That's your standard 5-wave structure as we're kind of looking for in terms of a continuation. All right, so if we look at this here, we've got wave 1. I'll just say this down here as wave 2, but I know it's a mess in there. All the way up to wave 3. Now we need wave 4 into wave 5. And that's really all we're looking for. Now, as far as the pullback is, volume is concerned, we would love to see the bulls bottom weight themselves down here and try to get the continuation up. And hey, what do you know? We have a major POC cluster in that mess of price action balanced out right at around 1800, 1795, big psychological level to try to kick the market back up. From a risk-reward perspective, from the bottom to the top, are we seeing suggestions that these are bulls and they are taking profit and possibly even scalping out? Yes. Where's the next target for them? Right at the next swing high. That's the 1-to-1. The 2-to-1 would be inside of the top for them, which means that this is a beautiful location for the bulls to try to get this job going. So even though gold in the short term looks like a mess, when we zoom into the 60-minute chart, it's starting to look really, really nice to creep this back up and keep this thing going on up towards possibly even the highs above 2,000. And then finally wrapping up on Bitcoin. Bitcoin's getting absolutely clubbed into the floor. Big rotation to the downside. I mean, this is something we've been talking about for a while. We've got a nice bear descent down, descending wedge lower, and a descending wedge that is breaking down. Now, from a probability perspective, whenever we have a move that's going lower and we have a pattern that looks something like this, right? And the pattern could look a lot of different ways from price action's perspective, but we generally have a descending wedge. And then the market breaks lower. That's very difficult to sustain. That requires a huge amount of money to keep that going, or a huge amount of fear. When you have those kinds of breaks, that's when you've got to zoom out to the old daily chart and look back as to where the market may want to pull back to. And very, very obviously, we can see a huge balance point just waiting with open arms. Yes, please, come back. 32,967, basically 33,000 down there at that major POC shelf that was built. Now, obviously, they might want to poke their head down underneath and grab sub 30K. There's a lot of stops that are going to be floating down there, but that's the zone of support that's likely going to hold the market. It might be for a while, it might be short-lived. We don't know until it gets there, but that's the support zone. If we do get a psychological flush, then we can obviously see that 20,000, the last major breakout point, is next. That would be a gargantuan pullback, but from a value perspective, well, that would be something to consider in one of those larger, heavy pullbacks that Bitcoin loves to do, like from 19,000 all the way down to 3, right? So putting that into perspective, 69 down to 20, it's actually not that bad, right? It kind of fits the bill for what Bitcoin has done. If we're looking at this in terms of parity from the top to the bottom of the last move, from there to there, we can take this over and look where that lands us. Right on top of the POC, a measured move to the tick. Aside from the fact that we literally can't ask for better than that, that is a huge area that traders are going to be looking for to be buyers. But let's stack the odds here. If the sellers have taken over and the POC is their balance point, where are the sellers likely to take over? Here we can see their half to one scalp target is right there. So we have everything stacking up for 33,000, 34,000. This is a huge zone. If they do break through and they want to chop the low, then we've got their one-to-one target, which is sitting right at around 25, and 20 is right there. So this is a big zone of support here in the 33s that would, I mean, the bulls need to stick this landing or they have a chance to lose a pretty big chunk underneath the bottom. All right, folks, that's going to do it for me. If you're looking for a way to hang out with me and trade with me and the rest of the VIP crew, you can sign up for a 1-week trial to our live trade room. You get our 24-page guide with risk reward just for signing up, and you also have the ability to schedule a call with me to take care of any questions that you have along the way. VIP members have the live trade room included in membership, so if you need any more info, you can swing over to SSFTG for more info on all of that. I hope you have an amazing week ahead. Stick to those plans. Stay safe out there, my friends. Until the next one, we'll talk to y'all then. Thanks for watching.